Listen, I don't care if you're my cousin. I don't care if you're my sister. I don't care if you're my best friend. I love you, but I can't co-sign for you. I'm sorry. I just can't do that. You know, I've heard too many horror stories. I still got people that owe me $10 right now. Real talk. All right, so let's get to the video. What's up? Welcome back to Majestic Sense Consulting, where we talk about credit. All right, so we're going to talk about a touchy subject right now. We're going to talk about co-signing. All right, we all have been there. We all have had a brother, sister, auntie, uncle, somebody that wants you to co-sign for them. And the answer is always no, N-O. All right, so for those who don't know what co-signing means, let me explain to you what co-signing means. So when you co-sign a loan, you agree to take responsibility for the debt if the primary borrower fails to make payments, basically. And essentially, you are guaranteeing the loan, which means that the lender can hold you accountable for the debt if the borrower defaults. So, if you co-sign for someone and they say, pretty, please do it. I just want, I'm gonna pay you back and all this other good stuff, and they don't pay it back, pay you the money back, you are responsible for that debt. All right. So today we're going to talk about the risk of co-signing. All right. So the number one risk of co-signing is the obvious reason, which is credit score impact. All right. So co-signing a loan affects your credit report just as if you took out the loan yourself. And so if the primary borrower makes late payments or defaults, your credit score will take a hit, a very drastic hit. Okay. Even if payments are made on time, the additional debt can impact your credit utilization rate, potentially lowering your credit score. So if you had a 740, okay, and you co-sign a loan, didn't pay the loan back, you can expect to lose at least 100 points. At least 100 points on your credit score. So just know that your credit score is going to take a really big impact, all right? Number two, which is financial responsibility. If the borrower misses payments, you are legally obligated to cover them. This can strain your finances, especially if you're not in a position to take on additional debt. Defaulting on the loan can lead to collections, legal action, and significant financial stress. And it can also cause a stress between you and that person that you were close to. All right, so number three, limiting borrowing capacity. What that means the co-sign loan appears on your credit report, which can affect your debt to income ratio. And so this might limit your ability to obtain new credit for yourself, such as a mortgage, car loan, or a personal loan. As some lenders, they can possibly see you as already being burdened with additional debt, right? So that can really hurt you in the long run, okay? And like I said, this could affect your ability to obtain new credit for yourself, such as mortgage or a car loan. All right. And number four, as we talked about earlier, was strained relationships. All right. This is one of the terrible risk of co-signing a loan for someone. All right, because co-signing for someone is a significant commitment. All right, and if things go wrong, it can definitely put a strain or even ruin the relationship with the borrower. All right, so what was once best friends could become, I mean, maybe not enemies, but maybe strangers because of, you co-signing for someone and they didn't pay you back. You have to be a very forgiving person to, co-sign for someone and they just didn't even pay it back. Okay, so financial issues are a common source of conflict, and the stress of managing shared debt can take a toll on personal connections. Okay, so let's talk about some real life consequences, right? Like some real world stuff. All right, Consider the story of Jane. All right, Jane, she co-signed a car for her brother, believing it was a temporary measure until he could refinance on his own. All right, that's what they talked about. That was the plan. All right. Now, when her brother lost his job and couldn't make the payments, Jane was left with the burden. Her credit score dropped significantly and she struggled to get approved for a mortgage, delaying her plans to buy a home. All right. Can you just imagine what Jane was going through? Jane had her plans laid out. Okay. She probably had a family. She was probably living in, maybe in a low income area, or maybe she was just living in a home that she was just outgrown and she wanted to put her family in another home, right? But she stuck with this burden of her brother losing his job and he couldn't make the payments on the loan. All right. So protecting yourself, okay, because like I said, this is a real life scenario. This is how you protect yourself. All right. Want y'all listen up. If you decide to co-sign a loan, despite the risk, please take these precautions to protect yourself. Number one, evaluate the borrower's financial situation, which means ensure that the borrower or your cousin, your brother, or whoever has a stable income and a reliable plan to repay you the money, to repay the loan. Ask for proof of income and review their credit report. Now, of course, they're probably going to say, wait, you want to see my credit report? Like, yeah. You got to treat them like the bank. If you go to the bank is going to be the same way. So you are the bank, right? You want me to co-sign a loan for you? I am the bank. So I want your credit report. I want to see everything. All right, so number two, let's be transparent and set clear terms, which means have a candid and open discussion about the repayment plan and what would happen if the borrower encounters financial difficulties. Put any agreements in writing to avoid misunderstandings, which means that, hey, listen, I think you may be good for this loan, but things tend to happen. So let's set some clear terms. Let's put something in writing. If a recession hit, if another pandemic comes through, you lose your job, how are you going to get this loan repaid? How am I going to get my money? How is the bank or the car people going to get their money? So you got to have a plan B because things tend to happen. All right. So number three, which would be to monitor the loan. And what that simply means is to regularly check the loan status and payment history to ensure that payments are being made on time. All right. Because many lenders often offer co-signers access to the account information, right? So if I'm signing on a car for you or whatever, I have the right to check the status if that loan is being paid on time. Because if it's not, you put in my credit report, my livelihood at jeopardy. Okay. Number four, which would be limit the liability, which means, if possible, ask the lender if they can notify you immediately if a payment is missed. Call me, email me. No, call me, because this can help you address issues before they escalate. So you co-sign for someone and you notice they've missed 2 payments. That's a red flag to say, hey, look, let's talk. Let's find out what's going on. Why did you miss 2 payments? All right. So let's talk about it. So once again, if possible, ask the lender if they can notify you immediately if a payment is missed. All right, number 5. And we're still talking about protecting yourself. Number 5, consider alternative options, which means explore other ways to help the borrower, such as lending them money directly, helping them improve their credit to qualify for a loan on their own, or seeking a co-signer release after a certain period of on-time payments. Now, this could be something you can also talk about. Like, listen, I don't really feel comfortable giving you, co-signing on a loan for you. What if I just give you half of the money? I just give you the money. Okay, because at least if you don't pay my money back, I just don't get my money back, and it's not going to affect my credit score. Okay. You can help them improve their credit score. If they're at a 500, and you say, hey, listen, if you can, if we can get your credit repaired, dispute some things on your credit report, and maybe get you up to a 650. Maybe we can talk about a cosign, or maybe I can give you some money to help you do what you have to do. So, those were 5 ways to protect yourself. Okay. Um, so, in conclusion, Co-signing alone is a very serious commitment. It's a delicate situation, a very, very delicate commitment, and it carries a significant risk, right? So, before agreeing to co-sign, weigh the potential impact on your credit score, your financial health, and personal relationships. Okay? Because by understanding the dangers and taking steps to protect yourself, you can make a more informed decision and avoid the perils of co-signing. Okay? So before you co-sign, give it some thought, know who you're dealing with, um, check the credit report. You want to dot your I's and cross your T's before you consider co-signing. All right? All right, this is Aaron Elsie with Majestic Sense Consulting, the number one credit repair organization in the USA. Like this video if you like it. Leave me a comment. If you have any questions, contact me at aaronelsie80@gmail.com, or you can leave a comment as long as it's a good comment. All right, in the comment on YouTube. All right, thanks a lot. Peace.